Is the stock market overvalued? Should you wait to start investing? I'm going to tell you why if you're a long-term investor, it doesn't really matter. This is the S&P 500 today, 5,900. But let's go all the way back to 1987 and take a look at how things were going back then. In August of 1987, the S&P 500 hit an all-time high of 336. But in October of 1987, there was the black market stock market crash where the S&P 500 dropped and hit a low of 223. That was a percentage drop of 33%. Oof. In February of 1990, the S&P 500 hit 500. And in July of 1997, the S&P 500 hit 900 because of the dot-com bubble. But you can see down here that in March of 2000, the S&P 500 hit 1527. This was the peak, the all-time high at the time. Imagine if you had started investing then, because look at what happened. The S&P 500 dropped to 768, a loss of 49%. However, by October of 2007, the S&P 500 recovered and hit a high of 1565, right before the 2008 housing crisis when, in March of 2009, the S&P 500 dropped to 676, a massive 56% drop. But by March of 2013, the S&P 500 has recovered. It hits 1569, surpassing the previous high. However, on May 21st, I only mentioned the date because it's my birthday, so make sure you put it in your calendar so you don't forget. I want presents. The S&P 500 in 2015 hits a high of 2,130. Oh, that's all-time highs. Panic, don't buy anything. Then in February 2016, the market drops to 1829 due to something, because your comment is cutting it off. Hold on. Global economic slowdown fears. And that is a drop of 14%. You can't see it because I've edited it out, but right here is the comment. It is like frozen on the screen and it stays that way throughout the whole filming, which is really kind of annoying. In January of 2018, the S&P 500 hits another all-time high of 2,872 points after we had some really strong earnings, I guess. But by December of 2018, the S&P 500 drops to 2351 due to interest rate concerns. That is an 18% drop. And then in February of 2020, the S&P 500 hits 3,386. This is another all-time high right before the COVID-19 crash when the markets dropped 33%, all the way to 2237 in March of 2020. But by August of 2021, markets are at all-time highs at 44.79. This is the post-pandemic recovery, and everything is strong, at least for the markets. By October of 2022, however, markets dropped to 34.91 due to inflation and interest rate fears. That is a 22% drop. In January of 2022, the S&P 500 hits another all-time high, 47.96. But by October of 2022, it drops to 34.91, which, interesting, the same number up here. That is a 27% drop. And then we have November of 2024, another all-time high of 6,017. The thing about being a consistent investor, that means you invest dollar cost average, a little bit or a lot, however much you can afford every single month into something boring like an S&P 500 index fund. That means you will be buying at all-time highs, you'll be buying during recessions, and everywhere in between. Yes, there are these big events like the Black Monday crash and the COVID-19 thing and the 2008 housing crisis. But the long-term trend for the market is up. This isn't unusual. Markets are always hitting new highs. Remember, today's highs are going to be tomorrow's lows. We're going to look back at 5,900 or 6,000 S&P 10, 20, 30 years from now and go, I can't believe markets were so low. Just like investors are looking at the S&P 500 today going, I can't believe the S&P 500 was in the 300s and the 80s when I first started investing. And that's the key word here. Start investing. You're not buying everything today. And that smart investor from the 80s stayed the course. They invested throughout. They didn't sit there and go, oh, markets are at all-time highs. I'm going to wait until markets drop. They just kept going. Waiting to invest usually means that you miss out. So yeah, maybe markets are a little bit frothy right now. Maybe they are overvalued. Maybe they are at all-time highs. I offer you this. Who cares? Remember, bulls make money, bears make money, pigs get slaughtered, and smart investors always smash that follow. Thanks for watching. See you later.